Hello everybody. Welcome to today's webinar based on Fibonacci for beginners. Hope everyone's doing well. Just wanted to wish everybody a very happy Merry Christmas for what's just passed and all the festive period, and happy holidays to all. Now, we'll just wait 1 or 2 more minutes for the rest of the attendees to join on the webinar, and then we can begin. So as we're waiting for the rest of the attendees to join in on the webinar, just have a quick structure of how our webinar is going to begin. So we'll do a quick introduction with regards to myself and how we will start our journey with Fibonacci today. So it will be a quick background of who Fibonacci was or who it was based on, and different strategies of how Fibonacci can be used in trading to apply in terms of buy orders, sell orders, signs of reversals, and from there it can also apply to correct risk management as well. And of course, should always be considered that this webinar is purely for educational purposes. Nothing that's said should be considered as financial advice, as of course with trading and CFDs, there's always risk that is involved. So risk management is key, and this is why Fibonacci can also be a very wise strategy to try and use to utilize risk management, which we will go through in the future as well. So we'll have a quick introduction now. So as we said, this is an introduction to Fibonacci. So this is the table of content that we're going to go through today. So we'll have an introduction, then we'll go behind Fibonacci to see the background of how its origins were, the actual sequence itself of what we see in many dimensions in the world, not just in trading, which what makes Fibonacci so fascinating to start with. Then we'll go into why Fibonacci can be used in trading, and then different ways that we can utilize the charts on MT4 and MT5. So that's where we'll be seeing the retracements of Fibonacci as well as the expansions of Fibonacci. Now, there's many different methods that you can use Fibonacci in with many different tools, but as this is for beginners, I want to take this very slowly, very simply, and then as we start to advance more with the technical aspects of Fibonacci and different dimensions of how we can use this, I'm sure there could be another webinar in the future that we can arrange. So we'll go into our introduction. So as we said, continuing our commitment to provide educational resources to all our traders, we're very excited to be presenting our introduction to Fibonacci ebook. Now, the ebook itself was very, very popular. It's what our webinar, of course, is based on today. Now, of course, as a trader myself, I know that when you're beginning, you can do as much reading as you like and as much research as you can try to do. But until you start to see things not only utilized in the charts that you can see for yourself, but also sometimes having that ear to try and almost narrate the book allows you to be able to take it in easier rather than just your voice that might not necessarily have the knowledge of the full content of the book. So this is why I wanted to try and do this webinar based on the book, so all that have read it or wanted to read it have a helping hand in how to begin. So I understand as well with Fibonacci, as we're going to go into it, when it comes to numbers and mathematics, it may seem complicated. And obviously when we get into the hard technicals, it can be complicated, sure, but we don't want to get into too much of the complications. We want to try and make it as simple as possible. So we will start now with quick background on Fibonacci itself. Now, Fibonacci sequence was introduced in 1202 now, which was by a mathematician named Leonardus Filius Fibonacci. Now, the Fibonacci sequence itself was not, let's say, not necessarily discovered by Leonardo himself, but it was him that introduced it to the Western world. So Leonardo was born in 1170 in Pisa, Italy. And of course, as a mathematician, he did travel to India where he discovered 0 and 1. Now, at this time, we were still working with the Roman numerals system. So going to India and discovering 0, 1 also allowed now the Western world to have a completely different system in terms of mathematics, which was the decimal system. Now, this was released in his book, which is Liber Abaci, which is the book of calculation, which was in 1202. Now, this is where we can start to see the sequence itself. Now, the sequence itself is absolutely fascinating. The most fascinating part for me is that it's an absolute phenomenon that you can find in many, many different elements. You can find it in nature, you can find it in animals, you can find it, of course, in trading. But generally, when it comes to the sequence itself, it's introducing 0 and 1 and then being able to continue the sequence on. So as an example, you can see the sequence 1, 1, 2, 3, 5, 8, 13, 21. Mathematically speaking, it's 1 plus 1 equals 2. 2 plus 1 equals 3. 3 plus 2 equals 5. 5 plus 3 equals 8, and so on and so on and so on. Now, the fascinating part, of course, is that this goes on to infinity. But the best part is that if you're dividing any two consecutive numbers, it gives you the same result. So as a few examples shown here, if we take the following numbers, which are 21 and 34, and to divide them, you will see that the calculation and result will end up with 0.6176. Whoever has a calculator on them, if you would like to try this, of course, be my guest. You will see that the results are indeed the same. So if you take another two numbers, 34 and 55, and you divide them, you again get 0.618. If you do the same with 55 and 89, you will get again similar 6179, which if you round it up is 618. Now, all of these examples lead to the same result. And if you actually do this in a similar way, but actually doing it with a second number divided, you will see a similar effect. Now, you will see, for example, 21 and 55. Now, if you see this in the sequence itself, you are simply skipping the 34. So it goes from 21 to 34 to 55. Now, if you were to divide 21 by 55, you come up with 0.3818 or 0.382 if you're going to round it up. If you're going to do 34 divided by 89, which is the next one, you will see again, it's 0.38.2. And again, with 55 divided by 144, the result again is 0.3819, which if we round up is 0.382. Now, to recap, what is evident by the examples above is that any consecutive number forward, once it's retraced back, will lead to the same level of retracement, which is the 61.8. Now, similarly, jumping a number ahead to the next consecutive number and retrace it, it will always again give the same result of 38.2. Now, when it comes to trading, it's also very important because this can help us identify where eventually, if a trend is going, where it can pull back, retrace, or of course correct. So if it's going up, which is the retracement level where it's going to head downwards for us to re-enter on that buy, or vice versa. If it's gone down, we're looking for this sign to go back up as a signal to try and sell again on that retracement. Now, understanding these ratios and movements allows traders to anticipate pullback levels and predict possible trading zone and targets. So as we've just said, if it goes up, we wait for it to retrace down a little, and that's our sell, and that's our buy opportunity, and vice versa. If it's gone down, we're waiting for it to come back up as a retracement to then order our sell again. So going on to the next slide, you have different important Fibonacci levels. Now, the ones that we've just mentioned so far, the 61.8 and 38.2, are two very critical levels, and some would consider these to be the most reliable or the most important. But we do have other levels as well, which also can give us a lot of information when we're looking at the charts, whether the actual direction is either bullish or bearish. Now, in reality, these traders we're not required to know all the numbers. Now, of course, if we were, we'll be doing a complete different subject, and rather than just trading, we'll be mathematicians. The most important parts for us are the critical levels where the charts can go for us to give the opportunity to identify if it could be a potential buy, if it could be a potential sell, if we're seeing any kind of sign of a correction or even a sign of a reversal. So, as we said earlier, there's different Fibonacci numbers that traders use and rely on. Now, some levels are obviously, again, like we said, more important than others. But the most used numbers are the 61.8, the 50%, the 38.2, and the 23.6. If we're using a Fibonacci expansion, which we'll also go on later, you would look at the 161.8%, the 100%, and our famous 61.8%. Now, the 38.2 and the 61.8 Fibonacci retracement levels and the 161.8 Fibonacci expansion level, respectively, these ratios are called the golden ratios. And according to many, these are the most reliable and the most important levels to work with, meaning that if we start to see and we've identified the trade and it starts to retrace back into these golden ratios that we've just mentioned, these are some of the most critical parts in the chart where we can start to analyze if our trade is either a buy or if it's a sell. Now, this applies with many different assets, and it also applies to many time frames as well. This is something that can be very useful when trading with Fibonacci, depending on if you're a scalper, if you're a day trader, if you're a swing trader. You can use Fibonacci in different time frames as well. But of course, the higher the time frame, the more reliable things are as well, because then you can identify if we're at a support level, a resistance level, what kind of trend we're in, as there's other factors as well that can help you identify if something is a buy or sell, as well as Fibonacci. Fibonacci should be considered more of a confluence rather than just a direct trading tool. It's very, very popular, but if you're using it in a smaller time frame, then if you're not taking into account what kind of trend this trade is, or if we're at a support level or resistance level, what kind of critical levels ahead, the Fibonacci can then be invalidated. So there's many things to apply to this. Now, as far as it comes to how we see it on the charts, it's important to mention that many traders adjust the numbers as well to their own needs. So many traders think that different numbers have different chances, different levels of significance. So everybody's different, and if you wanted to, when you're applying Fibonacci, you can also modify the parameters to suit you and add different levels. So this is up to you. The 78.6%, for example, is one that's not on the default charts, but if you wanted to add it, you could add it. It's one that some traders enjoy and find it to be more of a reliable retrace level when it's a deep retracement, others don't. So it really does depend on you as a trader as well. But the best thing to do is practice on your demo, and then from there you'll be able to start to see what kind of tool is best suited for you, whether it's the expansion, whether it's the retracement, or what time frame suits you best as well. So moving forward, why would we use Fibonacci? Why do traders use Fibonacci? Now, it's all about numbers. So prices, waves, and trends are all about numbers, and these numbers are always related to one another. As we said previously, when we're calculating these sequences and we do the divisions, we're calculating to see where it's going to retrace, because what comes up must come back down, what comes down must come back up. There's always going to be a sequence where you come back to where you began from to then regain your momentum to continue your next move. Now, Fibonacci makes it easier to find a retrace or a pullback level when you notice a trending move, which in turn makes it easier then to decide when to join different market trends. So technically speaking, Fibonacci levels allow traders to anticipate a correction or a retrace level, and they can use that accordingly for their trading opportunities. So if you've missed a big move already, then you can utilize your Fibonacci, wait for it to hit a certain level, as an example, 50% or 61.8, and then you could see how the market reacts. If there's some rejection there and it looks like it's going to continue going downwards or upwards respectively, then you can use the Fibonacci to see if it's breached a certain level, it then gets invalidated. Or if, of course, it has bounced on one of these levels and then continues its retracement, then you can also see how these levels can also be very critical for you. But we'll get into this a little bit more later on. So as far as it comes to how you can trade Fibonacci on MT4 and MT5, it comes built in these tools. So it's a lot easier for you as a trader to be able to utilize these tools on MT5. So all you really need to learn is how to utilize the retracement tool and the extension tool. So the way that you would do this will be shown now as far as it comes to our webinar and the slides and platform. So we'll start with our Fibonacci retracement. Excuse me. So the Fibonacci retracement tool, as the name suggests, is used when the price is retracing, of course, correcting itself during a trend. So if it's going up, it's correcting itself downwards before finding more momentum to go back up. And if it's gone down, we're finding some momentum on the upside to continue selling downwards. So there are obvious levels used in Fibonacci retracement tool, and the most common are the 23.6, the 38.2, the 50%, the 61.8, and in sometimes the 76.4% as well. I mentioned 78.6, but this one mentions 76.4. As I said before, it depends on you as a trader. Everyone has different levels that they are more attracted to or they find to be more effective for their specific trading strategy. So it really is up to you as the trader. But the levels are there, and depending on what kind of analysis you're doing, usually depending on what kind of levels are the most critical to you, you would see that depending on where the trade is going, if it's going to bounce on this level, it gives you a better understanding of if your trade is still valid or if it perhaps should be closed early. So again, that's up to you. So the levels which are used, they're used to measure how deep a correction or a pullback can go before the prices return to the original trend, as Chris said just now. So the correct way to place the Fibonacci retracement would be to find a swing top or a swing bottom and plot the Fibonacci retracement levels on these swing points. So once you see an opposite move, this is where the second point is set. So speaking from an upside perspective, if we're looking bullish, we're looking for an impulsive move from the base rally up to the top, and that's when you can place your Fibonacci retracement. Once you have placed this retracement, different levels will start to appear to you, and that's when you can start to see how the market is going to react and which levels it may hit on the Fibonacci. So how do you plot the Fibonacci retracement on the chart? So it's fairly easy to place the retracement tool on the chart. You will find the swing high and the swing low that you want to measure first. Once you have identified the swing high or swing low, that's when you go into your toolbar, you go to Insert, Objects, and in the drop-down menu, you will select the Fibonacci. Once you put your arrow on Fibonacci, you will see it will give you a different option: retracement, time zones, fan, arcs, channel, and expansion. The one that we're going to press on now would be the retracement. Now, once you click on retracement, that's when you can then place it on the leg/wave, whether it's a swing high or low, and then you can find the retracement levels. So if it's bullish, you can always place the starting point at the bottom, low, so the beginning of this base rally, and then ending at the point of the top of that high. So the default levels predefined in MT5's Fibonacci retracement tool are, as previously said, the 23.6, the 38.2%, the 50%, and the 61.8%. Now, once this correction starts, the price can be expected to find its support area near these levels mentioned above. Now, as stated before, though, if we haven't identified other confluences as well as Fibonacci, then this could perhaps be invalidated. So this is where, if you're on a time frame perspective, if you're on a higher time frame, you can identify major support or resistance levels a little easier than you could on a 5-minute, for example, as obviously the higher the time frame, the more accurate perspective we have of things. So in a bearish trend, it's the same thing again. Instead of it going up and looking for the base rally upwards to wait for the retracement, we're looking for the base drop this time. So we'll go from the high to the low. So it's the exact scenario that's opposite to the bullish trend, basically. So when the trend is bearish, place the starting point of the Fibonacci tool at the high, and then you place it towards the bottom. Now, once this opens up again, the same zones that we mentioned previously will appear to you. Otherwise, this time around, it's going to be in the opposite direction that we saw in the bullish trend. As we're in the bearish trend this time, you will see how the levels act as a support or resistance, and many traders have their orders there placed to buy or sell. So these levels can be used to determine targets and stop losses as well. So as I said previously, Fibonacci's can be invalidated if certain levels are not respected. So if it has breached, for example, the 61.8 and is approaching more to the 100%, then in theory, this Fibonacci is now considered invalid because it hasn't respected the significant zones on our Fibonacci, if that makes sense to you guys. So as you can see in the examples, the top example, the price is moving in a downward trend. So this means there may be a possibility for a correction to the upside. So this is where we would plot our Fibonacci, and this is where it could be our selling opportunity. So you would plot the Fibonacci retracement tool from the high down to the low. Now, in the both examples, as you can see below as well, the price had difficulties going through the retracement levels. So that's marked in blue in the rectangle in the images. And it creates a good support/resistance zone as well. So such levels can provide great trading opportunities. So as we saw here, we're looking, it had a rally down to the downside. We looked at our retracement. The retracement itself very much respected itself at one of our critical levels, and from there started to see further downside. Even when it retraced and attempted it on the second time as well, you saw some wick action, and then we start going downwards again. So this is, quite decent proof how these levels are not only respected, but this is where you could also place your stop loss as an example above this rectangle. So if it does hit your stop loss, it's because also the Fibonacci itself has been proven to be invalid rather than just, oh, I've placed my stop loss too tightly. So this is where you can utilize the Fibonacci and your stop losses at the same time, guys. Now, how do you find swing highs and swing lows? So it's important to find the last swing high or the last swing low on the chart. So in a swing high perspective, this is created after a clear move to the upside. So we'll start from a low, rise into a significant move upside. A high is called a high if from this point there is a correction downside, literally going below the previous low, like in the image below. Now, on the swing low perspective, a swing low is created after a clear move to the downside occurs. Now, starting from a high and going in a significant move to the downside, a low is called a low if from this point there is a correction upside, literally, ideally, going above the previous high, like in this image below as well. For a retracement tool, for the bullish side, bullish retracement. So by connecting the last swing low and the last swing high on our charts and plotting Fibonacci retracements, we can now see the Fibonacci levels, which we use to understand how deep the correction can be and what our potential buy zones would be after correction is done. For the bearish retracement, by connecting the last swing high and the last swing low on our chart and plotting Fibonacci retracement, we can see the Fibonacci levels which we use to understand how deep the correction can be and what our potential sell zones would be after the correction is done, like in the image below. Both examples show the swing high up to the swing low and to the swing low up to the swing high respectively. You can see how the levels have been placed out once the chart is drawn, and you can see once it's been extended how the chart itself starts to hit critical levels. In our first image, for example, you can see that it has breached the 38.2 and was approaching the 50%. However, there was a sharp projection to continue to the upside. However, if you do continue to expand the bullish retracement, you'll see it does come and hit the 50% as well. Another critical level respected before continuing its upward movement trend. Same thing goes for the downside as well. It's then hit 38.2. Now on the 38.2 this time round, you'll see it went down, had one more small attempt around the 38.2 before continuing its downside movement in a downtrend. So as you can see from both these examples, it's not always going to be 100%, but it is a tool to allow you to kind of predict where things might potentially go. So editing or deleting the Fibonacci retracement tool on the chart is very simple. So because on MT5, your Fibonacci levels are already set as a default, but you're also able to customize them as well. They can always meet your requirements depending on what your requirements are. So to delete or edit your Fibonacci retracement tool, you need to create it and be active first. So what you need to have is identify where your Fibonacci tool is. You will double click on the retracement line. Now, once it becomes active, you will see, because it becomes a little bit more highlighted, you will see 3 dots or circles as shown in your image below on the bottom left. So once you double click on your Fibonacci, that's when you will start to see the 3 lines, the 3 dots. Once you see these dots, you can then either right click or you can simply click delete on your keyboard. Once you've deleted it, it disappears from the chart. Now, if you want to also edit the Fibonacci lines, you can simply right-click on the Fibonacci when it's active and select Properties. When you select Properties, this will then allow you to customize the Fibonacci's in terms of how you would like best. So you can either add levels, you can add different colors. So as we mentioned before, our golden zone, our golden ratio, some like to highlight those specific zones in a different color so they can identify it's in its golden zone. Visually speaking, it's easier for them. So it really depends on you, as previously said, how you'd like to customize it. But the fact that you are able to customize it on MT5 and it's a fairly simple procedure, obviously makes your trading experience easier as well. So when you're trying to edit your levels, once you've clicked on the right and you hit on properties, that's when you can then obviously customize it to how you like. So you will then click on the common tab where you'll find the options to change the color and style of the line. So you can add it thicker, you can add some description, you can write a line to make yourself remind if you would like. So in the example, I've selected yellow as a color, as you can see in the image below, and the Fibonacci line has changed to yellow. So if you change the color, it will also appear on the chart with whichever color you have selected. Same thing goes for lines as well. If you would prefer a straight line or a dashed or dotted or thick, it's all up to you. You can also customize this as well. So you can just again, as we previously mentioned, go onto common, you find the different colors, you can then find the lines, and that's up to you how you'd like to change them. The next tab you'll find is the levels. You can use this tab for the following purposes. So when you're adding, it's to either add a new Fibonacci level. So as I previously mentioned, you have like the 78.6 as an example, the 78.6%. This could simply be added. So you would click on add, you would put in the numbers that you'd want, and from there you click OK, and then you have these new parameters as well. So it's pretty simple to add new levels. If you find that your Fibonacci are a little clogged or you're not happy with certain levels that you find aren't as effective for you, you can always simply remove them from the chart. So you can always just click the delete button. To reset the settings, just click on default buttons, and to change the current settings and levels, which is the level and description. So you can change the style of the actual Fibonacci levels in the line as previously said. So you can also change the color of the Fibonacci retracement level line as well using that option below. And then you can see the color of the retracement line has also changed to green. So again, up to you. You can change it to whatever color you like. The next tab, which is the parameters, it's rarely used, therefore we won't analyze it too much, but moving forward to the visualization tab, this one's interesting and it's useful when it comes to multi-time frame analysis. So when it comes to multi-time frame analysis, you're able to analyze a Fibonacci on any kind of time frame that you like. Now, some don't like this, some find the retracement or the expansion levels on a smaller time frame like the 5 or 15 to just not really be too effective, so they prefer higher time frames. If you're a scalper, you can try it out and see if it works for you. It really does depend on you as a trader as well. Others see buying opportunities, others see selling opportunities. It depends what time frame you're in. It depends what kind of trader you are. If you're a scalper, 5-10 pips is what you need. If you're a day trader, 5-10 pips isn't a lot. So it really depends on your perspective. Now, when it comes to the visualization, as we said, it's a multi-time frame analysis. So if you don't want the Fibonacci to be on every time frame, you can simply alter it to how you'd like. So there's different times when the chart becomes a bit crowded, as we said. So it can get a bit difficult to stay focused, which is why you want to keep it simple and clean theoretically. So on the visualization option, you can then basically select which time frames you would want. So it allows you to decide which you would like to be visible. So if you want to have the default, which is show on all time frame levels, this just basically means that when you draw the Fibonacci, it's visible on any time frames. However, if you uncheck this tick, the grayed out zones will become active, and then you can select the preferred ones. So it's up to you how you would like to use them. If you want to use them on all time frames, then just stick to the default setting. If you would like to stick with specific time frames, then you can add it to however you please. So as we see on the right hand side, the Fibonacci retracement levels and how you can use them on MT5, and then you can take another step forward. So we have our Fibonacci expansions now. So as we said, with Fibonacci retracements, we're looking for where a trade could potentially retrace or correct itself before continuing its original trend. Now, when it comes to Fibonacci expansions, they're a little different. So the Fibonacci expansion levels are used to forecast potential levels where the price is heading in terms of the ongoing trending direction. So in other words, if retracement levels suggest potential zones where the correction might end, expansion levels tell you where the ongoing trend might end. So this could be really useful information for the trader because it can be used as an exit point / target level. So this is where you could then place your take profit level as an example at one of these expansion levels. And if it was to hit it, then it's already triggered your take profit as well. Now, usually if it's going to hit on these expansions or retracements, sometimes it's not slow. Sometimes it's very, very fast. It's a quick wick into this zone. It collects the liquidity and then goes down to its original continues its trend. So this is why sometimes having your stop losses or your take profits already set, or in some cases sell limits, buy limits around these levels, sometimes they can be triggered. So again, it really is up to you as a trader in terms of what kind of way that you would want this. But the fact that you can use the Fibonacci expansion as a tool to predict where your potential levels could be, then obviously this is helpful. Now, where do you use the Fibonacci expansion and how can it be used most effectively? So because with retracement levels, they suggest potential zones where the correction might end, the expansion levels tell you where the ongoing trend might end. So if you're going to use it in terms of an expansion level, you have to try and find where a whole trend or cycle is over and then where a deep correction might start from. So we're looking at deep corrections when it comes to expansions. So there are various different levels that you can use in the expansion tool, but usually the most common are the 61.8%, the 100%, and the 161.8%. In sometimes you can use the 261.8%, but the 61.8 and 161 are considered by many to be, again, those golden levels. So when it comes to the visualization or the custom, if you want to customize these colors to go gold again, like we do with our retracements, this is something that you can do, completely up to you. The forming of how to draw a Fibonacci expansion instead of a retracement, though, are a little different. So plotting a Fibonacci expansion on the chart. If we're looking for it in a bullish trend or in a bearish trend, it's the same thing, just in opposite direction. So if we're looking at it in a bullish trend perspective, you will find the swing low, which would be labeled A, where the trend has started. The second one will be where the swing high, or where the market stopped and went down for the correction. So this is where you're looking for the base rally and where it has stopped. And then when you can find where the correction itself has also stopped, this is where we can put in our C part as well of the correction. So you have A, which is down, B to the up, so the swing, and then C down to where the correction ended. And once you have identified this, this is where your expansion levels will also come about. Same thing goes in a bearish trend as well. So it's the exact same thing, only in the opposite direction of the bullish trend. So in this case, in a bearish trend, we will find from the swing high, from where the market and the trend has started, you will find then the swing low, where the market stopped and went up for the correction. So like in the bullish, we went from low to high. This time we're going from high to low. And then from the low part, which is the B, we're going to find that swing high of the correction. So where the correction has stopped. So where it went down and came back up. When it finished coming back up, this is our C. This is our correction there. So an example in the image below is an example of how Fibonacci expansions plotted in an ongoing bearish trend. The point A marked in the image below is the swing high where the trend started. And the point B is the swing low where the market stopped and then went up for a correction. And where it went up for a correction is where point C is. Now, as a trading tip, always allow deviation above and below the expansion level, as sometimes the price will miss this level by a few points, sometimes it will break it and continue a bit further. Now, bear in mind, we're looking for the zone around these levels, not the exact specific level. So as mentioned previously as well, when we're utilizing Fibonacci, guys, It's a fantastic tool. It's extremely effective. However, we must use it as a confluence rather than a direct indicator / tool, because there are also other things to take into consideration. If we don't consider if we're at a resistance level or a support level, if we're in an uptrend or a downtrend, then when we're looking at these expansion levels, this is where we can see deviations. This is where it can break. This is where it can continue further. Now, it can be because simply it's never going to be exact. These are zones and these are assistance for us. It's not exact, but it also could be because if we haven't placed our correct support resistances, usually where these expansions level go to are the next support and resistance lines. So usually it could be more of a case of our drawings of the charts might not be as accurate. But sometimes, of course, it is just the market does what it does. We can't control it. And the best thing that we can do is try and limit our risk as much as possible. And using the Fibonacci retracement and expansion tools are very powerful and effective ways of doing so. So, as we said in our trading tip, we always have to make sure that we understand that we're looking for zones and not exact levels. So there could always be some deviations. Now, where do we find our Fibonacci expansion tool on our MT5 platform? So by default, you can only use the Fibonacci retracement tool in the tool area. So when you're looking for the Fibonacci expansion tool, it's usually not included when you're going for it firsthand. So usually what you'll do is you're going to go to your toolbar, you're going to right click where it says Fibonacci tool in the toolbar and then select customize. Once you're in customize, there's a pop-up window that comes on the left-hand side. You'll see Fibonacci expansion. You'll click on this and then you'll click on insert button. Once you've clicked on insert, you will then see it will appear on the right-hand side over here under selected. And there you have it. You've then now added the expansion tool on the platform. So this is where now you then go. After closing the pop-up window, you will see the expansion tool appear in your toolbar like you would also the retracement. Or alternatively, of course, if you would like to, you simply go to Insert tab, Objects, and in the drop-down menu, you will select Fibonacci Expansion down here, and there we go. Then after you've selected the Fibonacci Expansion button, in order to plot it, you need to do the following. Now, it's different to note, by the way, when it comes to the expansion and when it comes to the retracement. With the retracement, we're going from the swing low to the swing high, or from the swing high to the swing low, and that's it. The levels after that are given to us for granted by the Fibonacci retracement tool. When it comes to the expansions, however, we need to do two things rather than just one. So on number one, we're going to click and hold the mouse button starting from A, and then you're going to release the button once you're at point B. Now, once you have done this, we have to accurately select point C. So what we're going to do is we need to activate the Fibonacci expansion by double clicking it. So once we've double clicked it, we then move from the B, select it down to where our retracement has ended, and this is going to be our point C. Now, once the point C has also been drawn, this is when you start to see the Fibonacci expansion levels, 61.8, 100%, and 161.8 all appear, as we mentioned previously. And now these are the next levels that we can look at from the expansion perspective. And as you can see, not only did it continue to breach the 61.8 Fibonacci expansion, it then continued to breach the 100 Fibonacci expansion as well, and it's en route to try and hit the 161.8. So it does show how there is accuracy when it comes to these Fibonacci expansion tools and the levels that are there. As we mentioned previously, because they're based on mathematics, because this is a mathematical phenomenon, this is something that is out of our control. And when it comes to the charts, when it comes to trading, it can move just in as much synchronicity as we can in nature as well. It's just the way things work sometimes. And human psychology, at the end of the day, is what moves the markets. When we're looking at these candles, whether they're bullish or bearish, we're looking at the sentiment of traders and how they feel about that specific asset in time. So Fibonacci's are simply trying to project what the human psychology is also going to do moving into the future. So again, it's a very fascinating, very, very fascinating tool. Moving forward, obviously you have your bullish example of where you could look at your different zones moving forward. So once we've done our A, B, and C and our levels were plotted, we could have had our take profit level for the first one for the 61.8, or if we wanted to be a little bit cheeky and a little bit greedy, we could have even gone for the 100%. It would have taken a little bit longer, but we all have got there. Same thing goes for the bearish as well. Now, you can see how for the example, the Fibonacci expansion levels help projecting the potential targets and placing take profit levels. The same thing can go for the bearish as well. Once you've plotted from A down to the B, then you can plot the C. That's when that can be your sell target. Well, once you've sold, where is your take profit going to go? If it's going to continue to go downwards and it's going to breach our original B point, then the next level would be, in theory, to our Fibonacci expansion level of 100%, which we can also see happened afterwards, before, of course, breaching our 61.8, before continuing down to our 100 level. So these are the important Fibonacci expansion levels. The commonly used expansion levels are the 61.8, the 100%, the 138.2%, the 161.8%, the 200, the 238.2, and the 261.8. However, if we're going to be honest, the real focus is always going to go to the main ones, which are the 61.8, the 100, the 161.8, and the 261.8. The rest that are mentioned above are also, of course, significant and important. However, what we found usually is the most of the focus and the where the charts usually attract themselves mostly to are the levels that are mentioned just now in the 61.8, the 100, the 161.8, and the 261.8. So as mentioned before, the 61.8 and the 161 are considered by many as the golden levels. So as you can see here below, you have your price low, which is the bull trend initiative. You see our price high, you see our retracement, which hits around the 50% and the 61.8, and then continues upwards. Then you see it hits the 100 and then also hits the 123.6. It's interesting. You can see how it always hits. And again, when it comes to Fibonacci's, also note, it works with pretty much any asset that you can think of in terms of whether it's even instrument as well. So whether it's Forex or whether it's indices, commodities, sometimes even in some cases stocks and cryptos, they can work. But from what we've seen, when it comes to Fibonacci's, they're very, very popular and currently used most on Forex and indices and commodities. When it comes to cryptocurrency, because we've only been around with crypto for about 10, 11 years, then it's still fairly new. There hasn't been enough data to still suggest how accurate Fibonacci levels can be, as it's still a very immature market. However, there have been signs of accuracy with Fibonacci's as well, but we're focusing with Forex at the moment. So editing or deleting the Fibonacci expansion tools, again, it's very similar to what we did with our retracement tool. Once you do it, you first need to activate it by double clicking on it until you then see the circles and dots appearing, like we saw in our retracement as well. So once you do that, you click on delete. You can either click by right clicking first, then you'll find the option to delete it, but you can also just delete it shown just by clicking on your keyboard as well. If you want to edit it, then of course you can just simply right click and go to properties. Once you go to properties, you can then go like we saw in the retracement tool as well. As you see above, you have your common, you have your levels, your parameters, and your visualization. So you're going to go into the common tab, and then you can change the color, the style, the type of lines. In the levels tab, you can find the settings for the actual Fibonacci expansion levels. So you can use those to either add or delete levels. You can reset the settings to the defaults, and you can also edit the levels as well, which are already included. So you can also edit colors, styles of lines to whatever best suits you and how it can best visually help you as well. So there really is no right or wrong in terms of the colors or the visualization. It's whatever's going to be best for you and your vision as a trader, while of course still respecting the zones which are considered the most important / reliable in the markets. So when you're looking at examples of Fibonacci expansions, when you're looking in a bullish trend, you see the price has broken above the 61.8% and then it's moved higher to the 100% level. Now this is where it found support and then started to retrace down. So as you can see here, the Fibonacci expansion levels are indeed acting as resistance zones for the price. So if you were to do this expansion, you would have seen it came up to the 100%. And then once it hits the 100% expansion level, that's when we started to see some sharp rejection and then continuing and reversing its trend from upwards to downwards. So you could use, like we said, the 100% or the 1618%, for example, as potential take profit zones. Now, you can also use them as when it comes to the bearish trend as well. If you look at the example below, the prices bounce and respect perfectly from the 100% expansion level. After the correction, it keeps moving lower to reach the 1618%, where again, the level is respected and the price retraced to the upside. So you can see here also that the expansion levels are both acting as support zones and resistance zones for the price and projection levels for potential targets respectively. So depending on what kind of trend you're in, you can also see if it's developing a support or a resistance zone as well. So like we said, this is where you can apply stop losses, but more importantly, this is where you could potentially apply your take profit levels. So going into why you would go to M4 markets, as now that we finished the Fibonacci itself, you now would think, all right, now that I can start to practice, what do I do? You have your demo account, as we've always suggested as well. The Fibonacci for Beginners book and of course this webinar has been to try and educate our clients as much as possible in terms of how you could utilize Fibonacci. As far as it comes to the risk involved, there's always going to be a risk involved with no matter what we do. But when it comes to Fibonacci, this is one tool that you can use to try and utilize and apply correct risk management. So if certain golden zones, for example, have been breached, then you can have your stop losses above these zones as an example. If the zones are breached, usually it means the Fibonacci could indeed be invalidated. So you can look for where your Fibonacci can be invalid, and that's where you can place your stop loss. You can then, of course, reverse that and use it as a take profit as well. Now, I would definitely recommend you try to practice on the demo account with this first to identify the swing highs, the swing lows, the retracement levels, to edit, play around with it. It's not complicated. It may seem complicated in the beginning, but what you have to understand the most important part, from what I've seen from experience, when people are confused, it's mostly about am I putting the retracement to the upside or to the downside? When something is moving upwards, we go from the swing low to the swing high, and we're going from downwards from the swing high to the swing low. So that's the most important parts to really understand. The retracements are a very popular tool, but of course, with everything, they're not 100%. So as mentioned previously, must use Fibonacci's as a confluence rather than a simple 100% all-in strategy and only Fibonacci. As you may find, you could then find that the Fibonacci is getting validated and then you're confused over where the trade is going to go next. So why M4 markets? Of course, it's very low cost trading. So you have very tight spreads, very fast execution time as well. 33 milliseconds for the execution time. And as far as it comes to our spreads, they're some of the tightest in the market. Everything is live on our website for you to see as well. It's a very transparent broker, which is a big reason to why I wanted to join as well. As far as it comes to the trading conditions, like we said, it's very fast, it's very quick. We've just had the server migration as well, which have allowed us to drop our spreads even tighter, as well as the swaps. As far as it comes to the funds, your funds are always secured as they're in segregated accounts, and there's never any negative balance that we don't offer. That we offer negative balance protection as well. As far as it comes to support, there's always support there for you. Myself or whoever I've had the honor of being an account manager for as well, they know that whenever they've needed me, I'm there, and the same goes for anybody. And as far as it comes as well to the reliability of the broker, I wanted to try and initiate these kind of webinars to try and increase education. But at the end of the day, education is fundamental when it comes to the markets, and being able to speak or communicate with someone from your broker also allows you to see that we also do very much want the best for you guys as well. So this is why we want to try and provide as much education as possible to try and enrich your knowledge, because knowledge is power, and the more experience and the more knowledge that you have within the markets, it's only going to help you. Now, when it comes to Fibonacci's itself, I'm a very, very big fan of Fibonacci when it comes to my trading strategy. Many do enjoy it, but of course, there's always going to be limitations, which is why I've always mentioned it's more of a confluence than it is a 100% trading tool, and just that to be used for your sole strategy. Now, at M4 Markets, you have everything that you may possibly need in terms of the support that you have, the assets that are traded, and of course the commissions that you're paying. At the end of the day, as a trader, one of the most important things for you is how can I proceed with my trading while also at the same time not getting rinsed by the commission side of things as well. This is why we have very tight spreads, and this is why when it comes to our account types as well, we're flexible, and we also have very low commissions for our raw spread account and our premium accounts. So M4 Markets, as far as it comes to the broker itself, once you're on, you become a part of a family. You don't become a number, you're a name. There's people that care about you, and there's always going to be support there if you need it. So the 3 steps to start trading is very simple. Basically, you'll just register and verify your profile. So as per regulations, you would upload a proof of identity and a proof of address, which would be dated within the last 3 months. And of course, to complete your economic profile details. Once this has been done, you can then choose to open a live account or a demo account. If you're a beginner, it should always be recommended to start on a demo account first to do some practice before moving on to a real account. And if you're on a live account and you want to begin one, you simply click on deposit, you go to the method that you would prefer, insert the payment details, and then you can get started. If you ever need anything, you can always simply contact us by email at support@M4Markets. You can, of course, call us or visit our website. I'd like to thank everybody that attended our webinar today. It was a sincere pleasure to speak with all of you, and really hope the best for everybody. And I hope this has been a very interesting learning journey for everybody as well. So wish you everybody all the best. If you have any questions, by all means, please do get in touch after our webinar as well. And I look forward to speaking with all of you very, very soon. All the best, guys.